Come back. We'll continue our discussion on IND AS 116. We started with understanding the significant terms which are involved in recognition and measurement. We already discussed three things: commencement and inception of lease, lease term, lease payments, inclusion. Let's continue with lease payments and just talk about two small aspects before we move further. We saw four inclusions in the lease rentals. One is periodic lease payments or fixed lease payments, variable lease payments, guaranteed residual value, and penalties for termination of lease if it is not reasonably certain to extend the lease. Now that we have discussed these four as our inclusions and we identified each part, let's get into the exclusions as well. Exclusions from lease payments. There are only two exclusions from lease payments. The first exclusion are all your consideration paid for non-lease elements. Consideration paid towards non-lease elements. In our previous session, we did discuss about this concept of separation between lease and non-lease elements. How do you divide the consideration among lease and non-lease elements? That was in the proportion of their standalone selling price. So that was the non-lease elements which are separated from the lease component, and that consideration which you paid towards the non-lease elements are excluded from your lease payments. Variable consideration. To an extent, we saw that it is included. To an extent, we have seen that it is excluded. Go back to your variable lease payments. What is the variable consideration which is excluded? The one which is not linked to any rate or index is excluded. So this exclusion, I am repeating again. Not linked to a rate or index. So four exclusions that we have discussed and four inclusions that we have discussed and two exclusions. What were the inclusions? Fixed lease payments, variable lease payments which are linked to an index or a rate, residual value which is guaranteed either by the lessee or by a third party. Lastly, the amount of penalty which are paid towards termination of a contract when it is reasonably certain that the lessee will terminate the contract or when it is reasonably certain that the lessee will not extend the contract. Two exclusions: a consideration allocated towards non-lease elements in the proportion of their standalone selling prices. These we have seen in the concept of separation of non-lease elements. Non-lease components from lease components we have discussed earlier. It should be divided, the consideration in the contract should be divided or allocated towards lease and non-lease elements in the proportion of their standalone selling price. We have already discussed this concept. And variable consideration also we have discussed. Variable payments of lease rentals linked to a rate or index is included in your lease payments, while those which are not linked to a rate or index are excluded in determination of lease payments. That will bring us to the end of discussion regarding lease payments. Only the exclusion part which was left out, I am discussing right now. Now that we are done with this concept, what else definitions that we have to look at? Three major definitions that we have already looked at is commencement and inception of lease, lease term, lease payments. Now apart from these three, there are another four things that we have to discuss before we actually touch upon the recognition and measurement. What are the four things that I have to discuss? What do you mean by a lease incentive? Lessee's involvement prior to the commencement of a lease. Initial direct cost on lease and discount rates applicable. all your lease payments have to be measured on at present value in your recognition and measurement. So we have to discuss at what is the discount rate applicable for identifying the present value of lease payments. That is also a part of discussion. 4 things: lease incentives, involvement of a lessee before the commencement of a lease, initial direct cost of lease, and lastly we are talking about certain discount rates which are applied in determining the present value of lease payments over the lease term. Now that we have to discuss about all these things, let us begin with the first part. I am looking at lease incentives. What do you mean by lease incentives and how are they related? How is it so significant in understanding the lease payments? How will they impact the amount of lease payments whenever you look at lease incentives? Guys, lease incentives go something like this. Let's say the lessee has already occupied a particular premises elsewhere. Today the lessor is approaching the lessee. Please take over my premises. I'll offer you at a better rate. The lessee thought about it and put up the discussion with lessor and saying that if I have to cancel the current lease, I have to pay a certain amount of penalty to the existing lessor. Number 1. Number 2, for me to shift from this location to that location, I will incur certain relocation cost. If you ask me to pay lease rentals right from the beginning, I may not be in a position to pay those lease rentals. At least you will have to give me a concession of 3 months from the lease rentals. He has agreed upon all these things, and now the lessor, the existing lessor, was informed saying that the lessee wants to terminate his lease. The lessor has given you an instruction to pay a penalty. The new lessor has directly paid the penalty. He made the payment on behalf of the lessee, therefore it is a lease incentive. Second, the lessor is also paying you certain amount of relocation cost. He said, for purpose of relocation, I will give you 10 lakh rupees to shift from this location to that location and make sure that your facilities are intact. Apart from this, I'll also give you 3 months of lease payment waiver. You don't have to pay me 1 rupee of lease rental also. These are certain inclusions as far as what is a lease incentive is concerned. They significantly affect the lease payment. So let us look at lease incentives. Write down under lease incentives. These incentives can include penalty paid by the new lessor, penalty paid by the new lessor for cancellation or termination of existing lease. Second inclusion. Reimbursement of relocation cost. Can also include waiver of lease rentals for initial periods a penalty which was paid by the new lessor for cancellation of the existing lease, or he is reimbursing my relocation cost, or he is waiving the amount of lease rental to be paid for the initial periods. These lease rentals includes amount paid by lessor to lessee. Generally, lease payments are made by lessee to the lessor, but these are incentives paid by lessor to the lessee. So that is what is peculiar as far as lease incentive is concerned. Clear? Guys, these lease incentives, when I talk about, they have a very peculiar treatment. These lease incentives for the lessee in the books of lessee and in the books of lessor. Now, when I talk about in the books of lessee, these lease incentives should be reduced from cost of ROU asset, right of use asset. When you recognize, these amounts should be deducted as far as this ROU asset is concerned. But whenever I am talking about lessor, I will reduce from lease receivables. I'll talk about this measurement of lease receivable. I'll also talk about the measurement of ROU asset. But by reducing it from lease receivable, that is, reduce that income from lease over lease term. Whatever lease income that he was supposed to receive over the lease term will be reduced by this amount of lease incentives. So this is the peculiar accounting treatment which we will come up as far as the books of lessee by reducing it from ROU asset, as far as the books of lessor from the value of lease received. We will talk about this determination of lease receivable and your reduction of income over lease term along with the reduction from ROU asset in the books of lessee. We'll come back to this concept. But remember guys, in essence, these lease incentives are generally paid at the commencement of lease. Generally paid at the commencement of lease. Sometimes we come across situations where the regular maintenance and upkeep of the machine of the identified asset is first incurred by the lessee. Lessor reimburses these costs. The maintenance and the repair and maintenance cost of the identified asset are first paid by the lessee and then reimbursed by the lessor. Let's say, for example, a particular property was given to you on lease. You observed that there was a small issue in your bathroom where the plumbing facility was not proper. You called for a plumber fixed it. The plumber asked you for 500, you paid 500. You informed to the lessor saying that you are the owner of the property. There's a particular damage which I got it repaired. I paid 500 rupees. Lessor then transferred 500 or lessor asked you to pay deducted from the lease rental supposed to be paid. Such amounts which are reimbursement of maintenance cost cannot be considered as lease incentives. They are only considered as reimbursement of maintenance expenditure and therefore the lessee will not recognize or will not affect the value of ROU asset. Write down. reimbursement of cost. Reimbursement of maintenance or general repair cost of the identified asset by lessor to lessee should not be considered as lease incentives. Very, very important point. Don't call them as lease incentives because they're general repair and maintenance which are supposed to be met by the lessor, but the lessee paid it and the lessor is reimbursing it. You cannot call them as lease incentives. These incentives are generally paid at the commencement of the lease and not at a later point of time. Clear? I hope you got it. These incentives are penalties paid by the new lessor for cancellation of the existing lease and the reimbursement of relocation costs or waiver of lease rental for initial periods. These lease incentives in the books of lessee should be reduced from the cost of ROU asset. In the books of lessor, I will reduce it from the lease receivable and reduce the income from the lease over the lease term. Any reimbursement of general maintenance and repair costs which are for the identifiable asset which are supposed to be paid by the lessor but initially paid by the lessee and lessor reimburses these costs, they cannot be considered as lease incentives. So that will bring us to the end of one of the concepts that we wanted to discuss. Out of 4 concepts, we are done with 1. Apart from lease incentives, we said we'll also discuss about lessee's involvement prior to the commencement of lease. Before commencing the lease, the lessee is getting involved with the leased asset. What is this? Now, it generally happens so that the lessee might quote certain requirements. He might say, I want this warehouse. This warehouse, I want it on lease. But for me to be eligible to use this warehouse, I want the lessor to make certain changes. I got a design of the warehouse, how I want it to be, and the designing I incurred certain costs. I gave it to the lessor. And I said, you make sure that the asset is according to these requirements. To make the asset according to these requirements, I will pay you a certain amount as well. Now, after the lessor prepares the asset according to your requirements, the lease actually commences. However, in the transaction of the lease, the lessee has already involved himself, has incurred certain costs prior to the commencement of lease itself. What about these costs? How should I recognize these costs? How should I take into consideration of these costs? Just give me a minute, guys. Yes, guys. So I said the lessee is making certain payments or making certain expenses before the lease has even commenced. What is the treatment of these costs? Who is meeting these costs? Lessee is meeting these costs. I have my heading. The earlier one was part D, these incentives. Now I'll get into part E. Lessee's involvement before or prior commencement of lease. Lessee's involvement prior to the commencement of lease. Now, whenever I'm talking about this aspect of lessee's involvement prior to the commencement of lease, I told you he might incur certain cost of improvements or modifications to the lease asset, certain amount which is paid to the lessor as an advance. All these are lessee's involvements before the commencement of the lease. I can have cost of designing leased asset or cost incurred for modifications cost of leased asset or cost paid to lessor prior commencement These are generally incurred, guys. Generally incurred. Very recently, one of my client had a contract, has received a new contract for a godown to be actually altered according to the requirements of Amazon. So it was almost a 2.5 acre godown, and throughout the 2.5 acre godown, they were required to basically make sure that the requirements are according to whatever Amazon gave. For this purpose, Amazon has already given them 35 lakhs to bring the asset to the condition in which Amazon wants to use it. These are costs incurred for designing and modification of the leased asset according to the requirements of the lessee. Now, this cost or this involvement of cost prior to the commencement of the lease incurred by the lessee such cost incurred by the lessee should be included to the cost of ROU asset. Lessee recognizes an ROU asset, so whatever cost you incurred for involvement prior to the commencement of lease, I will include it into the cost of ROU asset. Clear? So this is lessee's involvement prior to the commencement of lease. We have completed with two things: lease incentives. Second one, involvement of a lessee prior to the commencement of lease. Now let's come into the third aspect, direct cost of lease. I'll call this with the word of initial direct cost. If you have to define what is an initial direct cost, these are such costs which can be avoided if the lease of the asset was not taken up. These can be avoided if the lease of the asset was not taken up. So that means these are costs which are directly incurred for the purpose of the lease. Write down. Incremental cost for obtaining the lease. Guys, these costs can be incurred either by the lessee or by the lessor. Incurred either by lessee or the lessor. Whoever it is, they can incur this cost. Can you tell me what are the inclusions of this initial direct cost of a lease? They are incremental direct costs of obtaining the lease incurred by the lessee or the lessor. What are such costs? Inclusions. Includes. What do they include? Document preparation cost, legal stamp duty charges. They are all such costs can be included. So first one, commission. Common thing here, whenever you take a lease, you normally have a commission which is paid to the agent who is arranging this particular premises. Second one, legal fee and documentation charges. Document preparation cost. For executing the lease agreement or for executing the contract. Some stamp duty has to be paid. The document has to be prepared. Even for the preparation of the document, there is certain cost that you incur. Lawyer will not work free of cost. So obviously he will charge certain amount for document preparation. Third one. Payment for existing tenant to move out. Existing lessee to move out. Already a lessee is existing. You are paying a certain amount so that he leaves the premises and vacates the premises. Consideration paid. To obtain a GRV from third party. Some agent I have appointed to identify a third party who can purchase the leased asset at the end of the lease term. That amount of consideration paid to the agent to obtain a GRV from the third party shall also be included in the initial direct cost. Please have a look at this initial direct costs. These are costs incurred which are incremental costs directly to linked directly to the obtaining of lease. Yes guys, I hope you got it. So these are incremental costs which are incurred for obtaining the lease. They can either be incurred by the lessee or the lessor. If the lessee incurs it, then what should be the treatment? The lessor incurs it, then what should be the treatment? If it is incurred by lessee, then what should be the treatment? If it is incurred by lessor, what is the treatment? If it is incurred by the lessee, if the lessee is incurring such cost, then I will include in the cost of ROU asset. If lessor is incurring such cost, then I will reduce from these receivables. My reduction from lease receivable is possible only if lessor is not a dealer. If he is a dealer, that means if he is dealing with these assets to only provide it on lease, then I will charge to P&L. I will charge to P&L if lessor is a dealer. Who is a dealer and who is not a dealer? How do I know when I should reduce it from lease receivable and when should I charge it to P&L? Now let's suppose you have got into an agreement for purchase of a vehicle on hire purchase. Hire purchase is basically entered into with the dealer at the premises of the automobile showroom. Let's say you purchased a vehicle, a two-wheeler on lease. Hire purchase is also a lease. So I've taken a hire purchase agreement from a particular dealer. The dealer incurred certain cost. Then such cost, initial direct cost incurred by the dealer in the automobile showroom is being charged to P&L. In any other case, if the lessor is not the dealer of the property, then I will reduce it from the amount of lease receivable. If you look at, this is very similar to the accounting treatment that we have seen as far as your lease incentive is concerned. Under lease incentive, we have reduced it from the cost of ROU asset. Under initial direct cost, you are including it in the cost of ROU asset. Under lease incentive, you are reducing from the value of lease receivables. Here also it is a cost which is paid by the lessee, by the lessor. So again you reduce it from lease receivable. Here you remember the incurred by the lessee, then only you will include in the cost of ROU asset. If it is not incurred by the lessee will not have any accounting treatment. So therefore, both are not possible at one shot. Incurred by lessee, different accounting treatment. To an extent, they are incurred by the lessor, a different accounting treatment. But lease incentive, on the other hand, it is incurred, it is involved in the books of both companies. Because for the lessor, it is an expense. For the lessee, it is an income. In essence, it is a gain to the lessee and a loss to the lessor. Clear? That is regarding my initial direct cost on lease. And that will bring us to the end of the before last aspect. After this, one last aspect is there, which I will discuss and then quickly move into your recognition and measurement. I hope you have written it and you have understood that this is either incurred by the lessee or incurred by the lessor. But lease incentive, if you have a lease incentive 100% it is an expense to the lessor and 100% it is a gain to the lessee. So both of them accounting treatment should be done. Now if you have written that, that will bring us to the end of this concept of direct cost on lease, which is your point number F. The last point which I will touch upon before I look at recognition and measurement is discount rates. One thing is for sure that these lease payments are either paid by the lessee or received by the lessor over the entire lease term. Over the entire lease term, the lessee keeps on making periodic lease payments or the lessor keeps on receiving periodic lease payments. These lease terms are more than 12 months. If it is within 12 months or exactly equal to 12 months, then he can apply the recognition exemption given under IND AS 116, which we have discussed at the beginning. But if it is more than 12 months, the concept of present value should kick in. You will always keep up the concept of present value in your mind because fair valuation is one of the most preliminary, most important concept embedded into all IND AS. So therefore, to measure it at fair value, I need to involve the concept of present value here. When I am involving the concept of present value, it definitely requires me to discount these cash flows for the lessee, cash outflows, which are in the form of lease rentals over lease term. For the lessor, cash inflows in the form of lease rentals over lease term, they have to be discounted to their present value. When you keep saying this word present value, present value, present value and discounting, you will always require a particular rate at which you discount these cash flows. Such rate at which you discount these cash flows is called as the appropriate applicable discount rate. What is the discount rate at which these future cash outflows to the lessee or cash inflows to the lessor should be discounted to be presented at their fair value? Let us discuss about that. The discount rate applicable is called as interest rate implicit from lease. Or if this interest rate implicit from lease is not available, instead of using this rate, I can use something called as incremental borrowing rate. So now I have to discuss about both. What is this interest rate implicit from lease? What is this incremental borrowing rate? When should I apply incremental borrowing rate? The primary rate which I have to apply is always interest rate implicit from lease. Let's see how do I determine. Interest rate implicit from lease is equal to look at the formula which I will apply in determining what is the interest rate implicit from lease. My interest rate implicit from lease is equal to, start with the present value of lease payments over lease term plus unguaranteed residual value UGRV equated to the fair value of underlying asset I'll equate it to the fair value of underlying asset or the identified asset plus initial direct cost. Of lessor. At the inception of lease. If you want to write it in words, I'll go like this. The rate at which the present value of lease payments over the lease term paid by the lessee to the lessor together with the unguaranteed residual value is equal to the fair value of the underlying asset plus initial direct cost of the lessor should be equal to, it should be considered as my interest rate implicit from lease. I'll write it in words for you. I'll write it in words for you guys. Write down below. It is a rate at which the present value of lease payments by lessee to lessor over the lease term together with what should it be combined with? Unguaranteed residual value equals to what it should be equal to? It should be equal to the fair value of underlying asset and initial direct cost incurred by lessor. I'll hide myself so that you can see this. Write down very carefully and look at the statement which I have given above in the form of equation. Both represent the same. The rate at which the present value of lease payments by the lessee to the lessor over the lease term together with plus unguaranteed residual value equal to fair value of underlying asset together with or added with the initial direct cost incurred by the lessor. The same thing I have represented it here like this. I think this is a better way of writing it. This is a better way of writing it. I've written the same thing in the form of a formula. Present value of lease payments over lease term together with plus UGRV is equal to fair value of the underlying asset plus initial direct cost of lessor at the inception of the lease. Such rate of discounting should be considered as interest rate implicit from lease. In a sense, this more looks like IRR to me. Remember IRR? What is your IRR? When your NPV is equal to 0. That means the cash flows arising from the use of the asset is equal to the cost of the asset. Same thing. The cash flows arising from lease rentals over lease term plus the unguaranteed residual value when discounted to their present value is equal to fair value of the underlying asset plus their initial direct cost incurred by the lessor is equal to IRR. Exact same logic is being applied here, but here it is called as interest rate implicit from lease. Guys, this IRR or interest rate implicit from lease is computed from the perspective of lessor. Interest rate implicit from lease is computed from perspective of lessor. How did I say that it is computed from the perspective of the lessor? Because look at these things. Initial direct cost of lessor. UGRV. Who knows UGRV? Lessee knows only GRV. Lessee knows only to the extent of GRV which he has guaranteed to the lessor. But he does not need to know what is UGRV. Unguaranteed residual value. Residual value minus guaranteed residual value. This is from the perspective of the lessor. So therefore, your interest rate implicit from lease is computed from the perspective of lessor. However, if lessee cannot determine this rate, he can alternatively use in case the lessee is not able to identify interest rate implicit from lease, he can alternatively use incremental borrowing cost. What do you mean by this incremental borrowing cost? This paragraph is very important because this is only available to lessee. It is not available to the lessor. Lessor will always use interest rate implicit from lease. Since you are calculating it from the perspective of the lessor, sometimes the lessee may not be able to use this rate. Therefore, in such situation, the lessee will apply this incremental borrowing rate. What do you mean by incremental borrowing rate? Incremental borrowing rate is the rate at which lessee could borrow amount to purchase a similar asset over a similar term with a similar security. So what do you mean to say? Instead of taking the asset on lease, instead of acquiring the asset or the identified asset on lease, if the lessee is intending to purchase the asset, I want to buy the asset. Why did you opt for lease first of all? I opted for lease because I don't have so much money to purchase the asset, man. I don't find any point to buying the asset because it involves so much of cash outflow. But instead if I would have taken it on lease, I would have paid it on periodic lease rental basis. So if I had to purchase this similar asset, then I would have borrowed funds. The borrowing of funds, at what rate would you get? At what rate I would have borrowed the funds to purchase the asset over a similar term with a similar security shall be called as incremental borrowing rate of lessee. This is called as incremental borrowing rate of lessee. A rate at which the lessee could borrow amount to purchase a similar asset over a similar term with a similar security. This rate is called as incremental borrowing rate. Clear? Clear with the concept? So what did I say? I would normally use your interest rate implicit from lease. If interest rate implicit from lease is not identifiable, then the lessee can alternatively use an incremental borrowing rate. So either of these two rates are the only discount rate at which you have to recognize any lease transaction under IND AS 116, because lease involves periodic cash flows which are paid over the lease term. By applying the concept of fair value, these periodic cash inflows to the lessor or outflows to the lessee should be discounted to their present value. When you are discounting it to present value, then the discount rate applicable shall be interest rate implicit from lease. If interest rate implicit from lease is not available for the lessee, then the lessee can alternatively use an incremental borrowing rate. And that will bring us to the end of discussion on all important terms that we have to discuss in the standard before we get into its recognition and measurement. Let me tell you that I discussed about commencement of lease and inception of lease. I discussed about lease term. What is the inclusions in the lease term? Non-cancelable period, together with the period for which the lease can be extended at the option of the lessee, together with the period which is covered by option to terminate if the lessee is not reasonably certain to extend the lease. Then we went on to discuss about inclusions and exclusions in lease payments. Fixed lease payments, variable lease payment linked to an index. Third one, residual value. Fourth one, penalty which is expected to be paid for termination of lease if the lessee is reasonably certain to terminate the lease. Two exclusions, consideration paid for non-lease elements, variable consideration which is not linked to any index or a rate. That was the third one. Fourth one, lease incentives. Fifth one, lessee's involvement prior to the commencement of the lease. He incurred certain expenditure for designing the asset, certain modification costs which I paid. I already paid it to the lessor before the commencement of the lease. Fifth one. Sixth one, I discussed about initial direct cost on lease, and I also discussed about its accounting treatment, how you would account it if lessee meets it, how you would account it if lessor meets that cost. Last and final one, we discussed about what is the applicable discount rate. Incremental borrowing rate to the lessee if he cannot determine interest rate implicit from lease. Otherwise, in general sense, I will only apply your interest rate implicit from lease. The interest rate implicit from lease is a rate at which the present value of cash flows arising from the lease contract over the lease term together with the UGRV is equal to the fair value of the leased asset together with the amount of together with the initial direct cost paid by the lessor. This will bring us to the full stop of all the important discussions that we need to have before we enter into recognition and measurement. And now we have laid enough foundation for us to get into recognition and measurement. I will begin this discussion for recognition and measurement from the books of lessee. First from the books of lessee, then I will get into lessor. But like I told you, the significant difference in the recognition and measurement is only in the books of lessee. Lessor's recognition, I would still go as per the same old AS 19 or IND AS 17 by bifurcating the lease into a finance lease or an operating lease. No such bifurcation is necessary for the books of lessee. Lessee will recognize every lease contract under the same recognition criteria. Clear? So let's look at recognition and measurement from here on. We're done with all the petty aspects in the standard. I think we can put our step ahead and say that we can start discussing our recognition and measurement from here on.